All right, ready to dive in. We're tackling Warren Buffett's 2023 shareholder letter today.
You know, that yearly wisdom drop from the Oracle of Omaha.
Exactly. And we're going to unpack it all, make it clear, and hopefully fun too.
And what I think is really cool is how Buffett frames it this year.
Yeah.
He introduces this idea of birdie, basically like the reader he's picturing.
Oh, interesting. Like a stand-in for us listening, right?
Exactly. Someone curious about business, but maybe not a Wall Street whiz.
Okay, so he's not writing for, like, the finance experts. Got it.
Yeah. More for, the everyday investor, just like Birdie.
Love that. Makes it way more relatable, I bet.
It totally does. And Buffett even uses Birdie to drive home a big point,
Which is?
focusing on what truly makes a business tick, not just the surface stuff.
Okay, give me an example.
Like he digs into the difference between net earnings and operating earnings.
Isn't that getting into the weeds a bit? Accounting stuff?
It might seem like it, but it's actually key to understanding a company's real strength.
All right, break it down for me.
Net earnings, they can be all over the place because they include stock market swings.
So like stuff outside the company's control.
Exactly. And Buffett sees those swings as irrelevant to how the business is actually doing.
Okay, I get that. So operating earnings, that's the more stable picture.
It is. Like, imagine judging a restaurant based on how many people walk by that day.
Versus how good the food is and how the kitchen's run.
There you go. It's about the core of the business, the long game.
And that long-term view, that's classic Buffett, isn't it?
Oh, absolutely. He even throws in a story about buying his first stock back in 42.
42, wow, that's going way back.
When the Dow Jones was under 100, can you believe that?
Under 100. Times have changed. But what's the takeaway for us today?
It underscores his faith in American business long term.
So ride out the bumps in the road, don't panic sell.
Exactly. Focus on the bigger picture, not the daily ups and downs.
Okay, makes sense. But how does he actually pick companies to invest in?
Well, he lays out a pretty clear strategy in the letter.
Lay it on me.
It boils down to finding businesses with what he calls good economics that are fundamental and enduring.
Meaning?
Not just the trendy hot stock of the moment, but companies with solid foundations.
Okay, so not chasing fads, more like the tortoise, not the hare.
Yeah. He wants companies that can reinvest their earnings wisely for high returns.
Got it. So give me an example. What kind of company fits that description?
Well, think Occidental Petroleum. They've got major oil and gas assets.
Right, and they're also making moves in carbon capture technology, right?
Exactly. Big investments there. Plus, Buffett seems to really respect Vicky Holub, their CEO.
Yeah, he mentions her by name, which is rare for him.
It is. He clearly sees her as a leader making smart calls for the country and for shareholders.
So solid business, strong leader, and tackling future challenges.
That's the Buffett trifecta. Though, he's also honest about past mistakes.
Like what?
He even quotes an old U.S. Treasury official, said, "Never deal with a rascal under the expectation that you can prevent him from cheating you."
Ooh, that's a good one. So even Buffett gets fooled sometimes.
It happens, which is why he stresses due diligence, really knowing who you're dealing with.
Makes sense. Trust but verify, right?
Exactly. But all this leads to an interesting challenge Berkshire faces now.
Which is?
Well, they're QDE, and that size makes it harder to find investments that truly move the needle.
I guess that makes sense. Like turning a giant ship, that takes a lot of effort.
Exactly. Small moves don't really impact them anymore.
So doubling their size, not as easy as it used to be.
Not at all. But Buffett isn't complaining. He highlights their strengths.
Like what?
Their mix of businesses, some huge winners, he calls them, and long-term managers.
And that long-term focus, that's got to be crucial when markets get crazy, right?
Oh, absolutely. He even calls it their not-so-secret weapon. They're incredibly conservative financially, always sitting on tons of cash.
So when everyone else is panicking, they can swoop in.
Exactly.
Right.
Buying up great businesses when others are selling low.
Smart. But he did also warn about the market being more casino-like these days, didn't he?
He did.
Yeah.
It's so easy to get caught up in the short-term noise with how fast things move now.
Yeah, everyone wants to get rich quick, but Buffett's all about the slow and steady.
He is. So how does Berkshire navigate this wild world? Well, they have a few tricks up their sleeve.
Okay, I'm listening. What are their secrets?
Well, for one, they focus on those long-term holdings we talked about.
Like Coca-Cola, American Express, those kinds of companies.
Those are the ones. They've held them for over 20 years, proving their worth.
Buy and hold, the classic strategy, but it still works.
It does, especially when you pick the right companies.
Yeah.
And speaking of long-term, He also mentions investments in 5 big Japanese companies.
Japanese companies, huh? Why Japan?
He actually praises their shareholder-friendly policies, their focus on long-term value.
Interesting. So he sees a lot of alignment with his own philosophy there.
It seems like it. And to fund these Japanese investments, they're using yen-denominated bonds.
Smart move, right? Managing the currency risk?
Exactly. Berkshire's always thinking several steps ahead. So
Sure.
we've talked about their long-term strategy, their ability to ride out market storms.
But what about their actual performance in 2023? How did their different businesses do?
Right, let's dive into that. Starting with their railroads, which face some headwinds.
BNSF, their massive railroad company, I bet that's tough to manage.
It is. It's a super capital-intensive business, always needing upgrades and maintenance.
Plus, they have to deal with weather, labor issues, all sorts of unpredictable stuff.
Exactly. It's a tough business even for a giant like Berkshire.
But essential to the U.S. economy, as Buffett points out.
Absolutely. He sees it as a long-term asset, both for Berkshire and the country.
So even with challenges, it's a hold, not a fold.
For sure. Now, their energy business had a rougher year.
Berkshire Hathaway Energy, right? What happened there?
Well, they got hit with regulatory hurdles in some states and the rising costs of climate change.
Wildfires. Those must be impacting their bottom line.
Big time. It just shows that even the giants aren't immune to those forces.
Yeah, sobering thought. But overall, Buffett emphasizes Berkshire's strength, their ability to adapt.
They're built for the long game, always prioritizing protecting their capital.
So even when things get tough, they're in it to win it.
Exactly. But there was some good news, too. Their insurance business had a fantastic year.
Oh, yeah. I always forget how big they are in insurance.
They had record sales, something called float, and big underwriting profits.
Well, hold on. Remind me, what's float again?
It's the money they hold between collecting premiums and paying out claims.
So basically, free cash they can invest and make even more money with.
Precisely. And a lot of their success is thanks to Ajit Jain, been with Berkshire since '86.
Wow, another long-timer. Shows how much they value experience.
Absolutely. And speaking of long-timers and experience, remember that Omaha effect we touched on?
Yeah, the Omaha effect. What was that all about again?
It's this funny thing Buffett noticed. All these super talented people in Berkshire's history.
They all have ties to Omaha, his hometown.
Exactly. Like Greg Abel, Ajit Jain, Charlie Munger, even Bernie, his fictional investor.
It's wild, right? Like, what's in the water out there?
Right. Buffett even jokes about it, wondering if there's some unseen force at play.
Maybe it's the Midwestern work ethic, the community spirit, who knows?
It's a fun mystery, but it does make you wonder, what makes certain places breed success?
That's a great question to ponder as we move into the next part of this deep dive.
It is. We've unpacked a lot already. Buffett's investing style, Berkshire's various businesses.
And even touched on the Omaha effect. But there's more to uncover, so stay tuned for part 2.
And as you listen to the next part, think about this. What does Buffett's success tell us about the companies that'll thrive in the years to come? What qualities might they share, and how might they differ from the businesses that dominated in the past? It's something worth considering as we continue exploring this letter.
Back again, digging deeper into Buffett's 2023 letter. You with me?
Still here. And yeah, we left off on that Omaha effect. Pretty intriguing.
Totally. But let's get back to those businesses Buffett thinks are set up for success.
Right. Remember, he's looking for good economics that are fundamental and enduring, his words.
Yeah, companies built to last, not just chasing the latest trend.
Exactly. But what does that actually look like? How do we spot those companies?
Good question. He talks about this idea of deploying capital at high rates of return. What's that all about?
It means finding companies that can reinvest their earnings really effectively, growing the value for shareholders.
So not just hoarding cash, but putting it to work, making it multiply.
That's the idea.
Yeah.
And Occidental Petroleum, the one we talked about earlier, they're a good example.
Right. They're not just pumping oil. They're investing heavily in carbon capture tech, too.
And Buffett sees that as a big part of the future energy landscape.
Plus, he really seems to admire Vicky Hollub, their CEO, right?
He does. Praises her vision, her commitment to both profits and doing things the right way.
So it's not just about the numbers, it's also about the leadership.
Absolutely. You got to have someone at the helm who can navigate the complexities.
Though even the best leaders stumble sometimes. Didn't Buffett admit to some missteps himself?
Oh, yeah, he was pretty upfront about it, which I respect.
What did he say?
Well, he admitted to misjudging the regulatory situation in the energy sector.
And that led to some losses for Berkshire Hathaway Energy?
It did. Shows that even Buffett doesn't have a crystal ball. Things can change unexpectedly.
True, even the Oracle of Omaha makes mistakes. Makes him more relatable.
It does. but it also shows he learns from those mistakes, which is crucial.
Adaptability, gotta be able to adjust to the changing winds, right?
For sure. And that brings us to another key thing Buffett looks for: resilience in tough times.
Like when markets go haywire, which seems to happen more and more these days.
Right. He knows that markets can be irrational, even downright crazy sometimes.
And the companies that can weather those storms, they come out stronger.
Absolutely. And Berkshire, with their giant cash reserves and disciplined approach.
They're kind of like the rock in the storm, right?
Yeah, they've got that stability that lets them capitalize on others' panic.
Makes sense. But how do they turn that stability into long-term success?
One way is through those long-term holdings we discussed, like Coca-Cola and American Express.
The companies they've held for ages, showing their faith in them.
Exactly. Buy and hold, it might seem old-fashioned, but Buffett proves it still works.
Especially when you pick the right companies and have the patience to stick with them.
Patience is key. And speaking of long-term, he also mentions investments in some Japanese companies.
Oh, yeah, I was curious about that. Why Japan?
He actually applauds their focus on long-term value and shareholder-friendly policies.
So he sees a lot of overlap with his own investing philosophy there.
Definitely. It's not just about finding a bargain. It's about finding companies you believe in.
Companies that share your values, your vision for the future.
Exactly. Though, with Berkshire being so massive, I imagine it's tough to find enough of those companies.
Yeah, to really make a dent in their overall portfolio, right?
Right. He acknowledges that. Their size makes it harder to find those needle-moving investments.
It's like trying to steer a giant ship. Takes a lot to change course.
Perfect analogy.
Yeah.
But even with that challenge, Buffett's confident they can keep winning.
Winning meaning outperforming the average company.
Yeah. And doing it with less risk, that's their sweet spot.
How do they pull that off?
Well, their diversified portfolio helps a lot, not putting all eggs in one basket.
Right, spreading the risk across different industries. Smart move.
Exactly. And their insurance business plays a huge role, too. Remember that float we talked about?
Ah, yeah, that pool of money they get to invest while waiting to pay out claims.
It gives them so much flexibility, a buffer, to take advantage of opportunities as they arise.
So it's like a financial superpower almost, letting them make bold moves when others can't.
That's a good way to put it. But it's not just about the money. Buffett also stresses integrity.
Oh, yeah, he's big on that, doing business the right way.
He is. He repeatedly talks about treating shareholders' money with respect, being transparent.
It's refreshing to hear. Honesty and ethics matter, even at that level.
Absolutely. And that extends to their environmental approach, too. Remember his focus on Occidental Petroleum and their carbon capture efforts?
Right, it's like he's saying, profits are important, but so is making the world a better place.
Finding that balance, that's what he seems to be after.
Which brings me back to something we touched on earlier, that Omaha effect.
Ah, yes. Still puzzling over that one.
I am. It's like, is it just chance, or is there something special about Omaha that breeds this talent?
It's a good question. Buffett doesn't have all the answers, but he encourages us to think about it.
Maybe it's the Midwestern work ethic, the sense of community, who knows?
Maybe it's a combination of factors, something in the air out there.
Right, whatever it is, it's pretty remarkable, all these business giants coming from one place.
It is, and it makes you wonder, what are the ingredients for success? Where do they come from?
A great question to ponder as we head into the final part of this deep dive.
It is. And while you're listening to the last part, consider this. How might Buffett's approach to risk help you with your own financial decisions? We've seen how he emphasizes avoiding big losses and having a safety net. How can you apply those principles to your own life and investments?
All right, final stretch. Part 3 of our deep dive into Warren Buffett's 2023 letter.
Wrapping things up, but still plenty to unpack.
You're right, always more gems to discover with Buffett.
One thing that stood out to me, I don't know about you, was how open he was about his own mistakes.
Yeah, not something you see from a lot of big-time CEOs.
He even admitted to, misreading the whole energy sector regulatory situation.
Which led to those losses for Berkshire Hathaway Energy. Ouch.
Yeah, a costly mistake, but he owns up to it, him and his team.
Doesn't try to sugarcoat it, which is refreshing.
Total honesty. And it's a good reminder, even the best investors get things wrong sometimes.
Nobody's perfect, even the Oracle of Omaha.
Right. But what's important is learning from those mistakes, adapting your approach.
And on that note, his thinking on capital allocation was interesting.
Yeah. He's open to different moves, buybacks, acquisitions, strategic investments. It all depends.
So no one right answer, gotta be flexible, play the hand you're dealt.
Exactly. But one thing he's always wary of is share dilution.
Yeah.
issuing new shares, unless it really benefits the existing shareholders.
Right. He sees it as protecting their stake, making sure new capital is used wisely. It's like he's saying, I'm guarding your money carefully.
And speaking of money, he had some pointed remarks about the stock market these days.
Yeah, even went so far as to call it casino-like.
He's concerned about all the short-term speculation, people chasing quick wins.
And it's so easy to get caught up in that with how fast information travels now.
Right. One tweet can send a stock soaring or plummeting. It's crazy.
He even warned about how easily foolishness can be marketed, especially nowadays.
With social media and all that, it's tough to filter the real stuff from the hype.
So do your research, stay grounded, don't just follow the crowd.
Exactly. But amidst all the talk about markets and money, there's another side to Buffett.
What do you mean?
He's not just about profits. He also cares about the role of business in society.
Oh yeah, he talks about that a lot, how companies should benefit the country, not just themselves.
Like BNSF, their railroad company, he emphasizes its crucial role in the U.S. economy.
Providing jobs, moving goods, keeping things running, essential stuff.
It's about creating value, not just extracting it. And I think that's a powerful idea.
And it extends to his investments too, like Occidental Petroleum and their work on carbon capture.
It's about finding companies that are both profitable and making a positive difference.
Trying to solve big problems, not just make a quick buck.
That's the kind of long-term thinking that Buffett embodies, and I think it's inspiring.
It is. It's like he's saying, success isn't just about money, it's about making the world better.
And that's a great note to end on, don't you think?
I think so. We've covered a lot: Buffett's investment wisdom, his view on markets, the role of business in society.
We've explored Berkshire Hathaway's diverse businesses, even pondered that Omaha effect.
It's been quite a journey, and if you're eager to learn more, the full letter is out there.
It's a treasure trove of insights, so definitely give it a read.
Thanks for joining us on this deep dive. We hope you found it insightful and maybe even a little bit fun.
We had a blast. And remember, keep thinking about those big questions. What makes companies succeed? How can we all invest wisely?
And how can we use our resources to make a positive impact on the world?
That's what it's all about.